Vladimir GT.
And I'm Carolyn Costello.
It is another brutal day for America's financial markets. The Dow is getting hammered. It dropped more than 500 points this afternoon as the price of oil continues to drop lower. Right now, the Dow is down around 450 points.
Crude is now below $30 a barrel. The plummeting price sending shockwaves around the globe during a time when China's economy, the second largest in the world, is showing new signs of panic. Marlie Hall is on the floor of the New York Stock Exchange with more on today's slide. Marlie.
Well, Vlad and Carolyn, crude is trading below $30 a barrel, a record low. Analysts say the cost keeps barreling or going down, and if it continues to drop, jobs in that sector will be lost. Lower prices at the pump will save consumers some money, of course, but oil companies will suffer, go into debt, and may be forced to lay off employees as their stocks continue to drop. Sinking oil prices have been affecting the market since 2015, so a significant swing in the market either way, as a result, doesn't really surprise traders. Now, I have a trader here with me right now, Stephen Guilfoyle of Deep Value Execution Services. Now, tell me a bit about what's going on today and what's prompting this sell-off.
You see, overnight in Iran, they had an official talking up production, future production for that country, which we already have such a huge supply on top of the planet right now, as far as crude is concerned, that only exacerbates the problem. We also had some liquidity issues in China, which the PBOC tried to address, but that only added to the global equity problem this morning.
So what is the outlook? What can we expect going forward?
You know, going forward, next week you have the CPI. And now the Fed's in a tight spot because the macro in this country has been really weak. I mean, just today we had about 5 or 6 items that came out weak. Over this month we've had many items that came in weaker than expected, even contractionary. When the CPI comes out, if it's hot, if it's a little hot, if the core CPI rather is hot, then the Fed is going to be in a tight spot because they'll almost have to raise. When they really should not be raising. They'd be actually considering, if they hadn't just gone into an interest rate rising period, they would probably be considering easing monetary policy right now, given these macroeconomic numbers.
What does that mean for the market? More sell-offs?
You know, we are sitting at a level right now where we could see still significant downside. Now, going long term, there's not a lot of alternatives out there for investors. There's not a lot of places where you can make money. So I think they do have to come back to the stock market. But right now, treasuries are hot. That's where people are hiding out. Utility stocks is someplace they can go because they pay a nice dividend. But right now, it's a falling knife. And do you want to catch a falling knife? I don't.
I don't either. So what does this mean for the average investor with a 401k?
The average investor with a 401k right now is probably best not to react very quickly to this. If they are comfortable with whoever's been advising them, if anybody has been advising them, then they probably should go back to that guy and say, am I okay here? Do I need to be doing something different? Maybe I want to move into safer securities. Maybe I don't want to take a chance on high beta. Beta means volatility for the average guy. High beta names, maybe I want to go into ma and pop names that pay me every quarter so I get some revenue if the stock goes the wrong way.
Now, we were talking a little bit earlier today, and you said for the average investor, don't look at your portfolio today.
Yeah, you know, it's hard not to do when you're nervous. A lot of people only check it once a month or once a year, once a quarter, you know, if they're not in this industry. So if you checked it on December 31st and it looked all right to you, you know it's bad right now. If you check it, you're probably going to react. And when you react in a state of emotion, you're bound to make a mistake.
Stephen Guilfoyle, thank you so much for joining us today on CBSN.
You're welcome.
Vlad and Carolyn, back to you.
All right, Marlie Hall there on the floor of the New York Stock Exchange. Marlie, we appreciate it. Thanks.